Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to talk about things that are happening in the bank world, things that are happening in the financial world. But we are going to give you an update on the portfolio. We're going to give you some updates on some of the positions that had a massive jump this week, which is fantastic. But before we do that, we will get and update you guys on the portfolio itself. And so if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. Let me just try and center myself here because it's some big news. So for the day here, we are closing out the week at $8,179.83. We have broke the $8,000 mark in this portfolio. We're up $63.39, up 0.78% for the day. For the 1 week, we're up $353.46, up 4.52%. What a great week that was. And for the 1 month, we're up $551.62, up 7.23%. For the 3 months, we're up $420.62, up 5.42%. For the 1 year, we are up $1,507.13, up 22.59%. And for the all, we are up $1,532.32, up 23.05%. Okay. The position we updated today was on Manulife Financial Corporation, which is this one here, closing out the day at $24.37, up 33 cents on the day, up 1.37%. Not bad at all. We now own 34 shares of this. Average price of getting in is $22 and a penny. It holds about 10.16% of the portfolio. Total position value of $828.58. Today's return was $9.18, up 1.12%. And since starting the position, we're up 10.7%, which equates to $80.09. Today we purchased four shares at this morning at $24.55, total cost of $98.20. Okay. And so that is Manulife Financial Corporation. So what we'll do is we'll head over to trackyourdividends.com very quickly, and we will update this. To give you guys an update here, portfolio without the cash account and the updated position previously. Today, without the updated position, it closed out at $8,021, up $1,671. Dividend yield of 2.93%, yield on cost of 3.7%, annual income of $235 a year, and that is in Canadian, folks. And this is with this portfolio here. So if you want to pause and take a look, you definitely can. But we are here and going to update the position on Manulife. Previously, we did have 30 shares of this position, and today again it closed out at $24.37, and it was up 33 cents today, and yield on cost was $21.68. Profit of $80.70 last week. Dividend yield of 4.6% today, but our yield on cost currently is 5.17%, and our annual income is $33.60, which is great. So we'll go ahead and add a holding to this one. Ticker symbol for Manulife Financial Corporation is MFC.TO. There it is, pops up. We purchased 4 shares today, and it was at a price of $24.55. Add that holding, and boom, things have changed a little bit here. We have $8,118 at a portfolio value today without the cash account, up $1,670. Dividend yield is 2.95% if you're to build a portfolio today with the updated position. But our yield on cost using the strategy of dollar cost averaging is 3.72%, with our annual income increasing to $240 per year. So now, Manulife Financial Corporation, 34 shares, 33 cents up on the day. Dollar cost average, yield on cost, average cost went down to $22.01. Total profit of $80.24. Dividend yield is still 4.6 at the end of the day, and yield on cost is 5.09, with an annual income of $38.08. This is the biggest dividend that we receive based off all the other dividends. This is the largest dividend that will pay us on a yearly basis. Of course, that is a great thing. And the reason we keep on buying Manulife Financial Corporation is because we are rebalancing the portfolio. Not rebalancing, we're just balancing it out so that each position holds about 10% of the portfolio, which is great in that sense. And so there's no really pick for the month of November. There might be down the road. I might change it up here because we are getting close to that 10% position in Manulife Financial Corporation in the portfolio. We might increase it a little bit because as we increase another position, that position will come down. And that is the beauty of balancing the portfolio or rebalancing the portfolio. And so that is on trackyourdividends.com. If you want to sign up for that, it's completely free unless you want to upgrade to the premium membership. I'm not affiliated or associated in any way with these guys at all. I just use them because I like the site. And it does pretty good, except for there are a few errors on the site where if you go to view upcoming dividends, under Loblaws here, you can see that it says it's a semi-annual, but it's actually not. It's a quarterly dividend. It is a bit off there, and I think some of these dates are off, but it's a new year, so who knows. So we will head back to here, and we will head back to Wealthsimple Trade, and we'll talk about the spreadsheet real quick because we have hit a great milestone, and we've hit the goal, and hopefully we can maintain it. Total dividends being paid out this year of 2021 is $160.65. Year-over-year growth in dividends is 825%, which last year we used $17.37 as the baseline, but this year is a full year, so next year we'll have a more accurate number in dividend growth. Net deposits so far up to this date, including referrals. So if you haven't used the referral link, get your free stock down below and use that referral code. You don't get the stock itself, you just get the value of the stock, and then you take that money and you can use it to purchase whatever stock you want. And the great thing is that there's fractional shares. So if you get $13 or whatever it is, you can use that towards an Amazon stock and get 0.0001 of whatever stock it is, Amazon, for example. And yeah, so referral link down below. Total invested since starting the portfolio is $6,647. Yeah, $6,647.51 since starting the portfolio. Market value today, again, closed out at, as you can see on the screen, $8,179.83 Canadian, which gives us a performance for the year of 10.21%. So last week, as you saw, I think we were down to like about 5 or 6% there. And our goal was to hit about a 10% year performance, which is good because we're not that far off from the S&P 500 index, which is coming close to that 15% return this year, I believe. And there are a few reasons on why that is, and then we'll get into the big news. So last week, one of the positions that we have, which is Qualcomm, ticker symbol QCOM, had posted their earnings, had reported their earnings. Something just fell in my closet. That was weird. But you can see it popped off. So they reported earnings and they beat expectations, which caused the stock at the end of the day for the next day to open right at $156.33. And we hit a peak of $165.82. And the all-time high on this one, I do believe, was $168 or $168.55, which is fantastic because this is one of the positions that we were kind of losing money on, but we were just starting out the position. So the average price of getting in for this one was $140.31. It now holds 15.2% of the portfolio with a total position value of $978.18. Now, the reason that it was such a big deal that these guys beat earnings was because they were able to diversify their book. And when I say their book, I'm talking about their sales tactics, not sales tactics, but their products and services. They were able to diversify that because a lot of people were moving away from Qualcomm. As you can see, Apple is moving away from using Intel-based chips, and they're trying to do the same thing with Qualcomm, but they still have to use some services of theirs. And so a lot of people were thinking, oh, Qualcomm might not be able to do things that they need to do because they're a B2B business. So they're business to business, not business to people. And a lot of businesses are now trying to produce their own set of chips. So the chips that are in your computers, in your laptops, in your phones. And there's only a few companies that actually do that, like a handful. There's not hundreds and hundreds of companies that do this. And Qualcomm has been around the block for quite some time. And so they had quite a tighten grip on the marketplace and the market share. And so when they showed that their earnings were increasing, it was quite a surprise. And that means a good business plan, good management, and they're heading in the right direction. And they don't need, per se, a massive company or $1 trillion company to keep their business afloat. And so that was a good sign. It has now increased to a 15% position in the portfolio, which is fine. That is straight off of growth. That is not me putting any more money in. As you know, we've been putting money into Manulife for the past month. And so that was the big jump there. And I do believe there are a few other ones, but I think that was probably the biggest one. It was about a 20%, not Manulife, about a 20% increase in the week here. 23% increase in the past week, which is pretty awesome in that sense. So what is the big news that I'm talking about? The big news that I'm talking about, if you guys don't remember, I did make a video on OSFI, which is the regulatory body for financial institutes in Canada, the banks. Today is November 5th as I'm recording this video, but on November 4th, they did make an announcement where they are releasing the banks from restricting increase of dividends, share buybacks, and so on and so forth. So what does that mean? Anybody who's been purchasing bank stocks since March of 2020 last year, when they first put the restriction on, if you don't know what the restriction was, the restriction that they put on the banks in March of 2020 was that they were not allowed to increase dividends at all because of what was happening around the world. They were not allowed to do share buybacks, which is a very important thing. And I talk about this in one of my how to read financial statements and how important it is for share buybacks. But yesterday, November 4th, 2021, the superintendent of OSFI, announced that they no longer have that restriction. It has been lifted as we are seeing a good, strong economy in a sense. And they are now giving the green light to the banks to increase dividends and also do share buybacks. Okay, and how important is that? That means our dividends are going to increase as they should be with these banks, because they can only have so much cash on hand. They don't need that much of cash reserves. They only need enough to cover if something were to happen in an economic downturn. And share buybacks is super important. That's the second thing, is when they buy shares back, they are taking more shares off the market, which means you get more equity in the company, which also means a slight, and not right away, but a slight increase in your stock price, because there is more value in less shares than there is in a ton of shares. Take, for example, cryptocurrency. There's so many of it that sometimes tokens or coins are worth less than a penny. And so that might be a bad example, but the less shares that are on the marketplace that you own means you have more piece of the pie, which means more equity for you, more ownership, and just an overall better investment. So doing share buybacks is a great thing. That's what they will use the extra cash on hand to do. So the free cash flow, to use that to buy share buybacks or increase dividends, which is good for all dividend investors, for growth investors as well, that really believe in the banks, like myself. I'm super excited to see that, because we will see a steady growth and maybe even a big jump within the dividends. And that puts a smile on my face, right? Because that is going to create some great cash flow for all those that are holding on to the banks, that believe in the banks in Canada specifically, because we have one of the strongest, most regulated financial sectors around the world, in the world. That is the big news, because it's been on a freeze for over a year, and now it's gonna grow. Okay. And so other than that, guys, that is it for the video. If you made it this far in the video, don't forget to hit subscribe, because if you have gotten to this point, I don't know why you haven't subscribed. I just don't know why. Okay. And if you got to this point, you have to tell me why you're not subscribing, and why you're not liking the button, or touching the button, or clicking on the button. It takes one click. If you're on a Mac, one click. If you're on a PC, one click. Okay. just leave a like. It helps the channel grow. It helps us get this exposure out. Other than that, guys, I hope you guys have a great weekend. It's been an awesome week for all of us. Tesla has hit all-time highs, which is fantastic. Qualcomm has jumped. We are seeing restrictions being lifted on the banks. It's all heading in the right direction. We're going to end this year off in a great year. And on that, guys, thanks for watching. Have a great weekend, and we'll see you in the next one. Bye.